Welcome to a new video on my channel. I hope you're fine. And today I want to give you an overview about the upcoming merger between SWVL and GMBT, Queen's Gambit Growth Capital. And I'm jumping around in the investor presentation of SWVL because I'm not that happy with the way they organized it, but you'll see it later on. So why did GMBT choose SWVL? The one thing I want to point out is the vision. They are global non-displaceable technology revolutioning mass transit. So this is something to keep in mind. And then I want to switch over to what they're doing, because in the beginning I was a bit confused because they have around 81 slides on the investor presentation, but at least for me it wasn't that easy to get it all together in a structured way. So that's why I'm trying to jump around for you to make it easier. So the SWVL is divided into segments. So the first one is consumer segment, which then is again divided into segments. On the one hand, retail, which offers book seats on vehicles available exclusively on the SWVL platform and to communicate within a given city. And then there's the travel one, which is for longer distances with buses normally. However, it's also exclusively on the SWVL platform. So this is the first part, which is consumer based, and the second part is business based, and they want to have the service as a software and also transportation as a software. So they want to enable companies and schools especially to provide mass mobility solutions, and they want to give the platform behind it. So this is the two ways they want to make money. And when you then think, okay, maybe it's not that big of a growth in my opinion, that's probably because we have the eye or the viewpoint of a person out of developed nation. And as you can see on this slide, they showed how much longer different persons in different countries have to wait for a transit or public transportation, and or maybe not wait, but how much access do they have. And the bluest, the developed nations, as you can see, almost 90% have convenient access to public transportation, whereas in the other countries like Egypt, because that's one example later on, therefore I'm stressing this, it's only around 20%, so this is a lot lower, and therefore it makes sense that they want to target these areas in particular. And also because the Queen's Gambit team is women only, there is also the part why they choose this company, because of sexual harassment on public transportation of women. And as you can see, there's a lot, unfortunately a lot, especially in these companies, and I would hope that it's better in the developed nations, but yeah, they're not that hard about this. Additionally, the company points out that there are also major problems with the transportation system in these countries. One is the inefficient bus usage, so it's only 2 trips per day, which is a lot lower than the normal numbers in developed nations. And also the buses are underutilized because there's a lot of, or most of the traveling is in different areas and time frames, and then there's a lot of untapped potential, as they said. So in this slide I want to show you a little bit more about the different segments, and I want to give you a little bit more details about the segments. So as before, in red there is the business side of, or the consumer side of business, and red is the retail. So you can see the customer in the middle in the yellow, and especially to the trips to the mall or to work, they could use these transportation areas. This is normally a shorter distance, whereas the the green one for the travel is a bit lower, and also maybe for a longer time period. And yeah, as I mentioned before, the blue part for the business to business, which should or would include the whole the whole parts. However, it's an offer for schools, for example, or other companies which have a lot of or more people going to the same place regularly. So this is something to bundle together and might be interesting for them. One word which is stressed throughout the presentation is the network effect, and makes sense to me. If there are more drivers and more platforms, more vehicles on the platform, this means more routes, and therefore more routes means lower time to the next station, or even to be part of the route, and therefore this is a snowball effect, because then they have better or faster ways of transportation, and later on then they also have lower costs, which leads to better customer experience. So this is all in all a snowball effect. In the beginning, it's, I think, crucial to get a lot of routes, or at least a few routes, and then afterwards scale up as needed. And the numbers they achieved until now are quite nice, I think. A lot of countries, also 16 countries and 37 cities, and around 1.6 million riders, which have used SWVL up to date. Huge growth numbers, however, normally starting from a low beginning, and 53 million bookings to date. And this is also shown in the growth since inception. As you can see in the beginning, it was meager revenues, however scaled up pretty fast, and now they are growing pretty rapidly, but still from a low starting point. So this is something to keep in mind. They had some problems between COVID, definitely, as the transportation has been reduced quite drastically, and afterwards they recovered pretty nicely. At least this is what they expect. So keep this in mind and take it with a grain of salt. And then, as you can see, there's also a huge advantage for the bus driver if they're with SWVL, since they can use the bus more efficiently and therefore can use it in more months. And this leads to a higher price or wager, and this is a good sign. And it also helps the snowball effect. If there are a lot of drivers, there's a lot of routes, and as I mentioned before, this will snowball into the future for the company. Something to keep in mind also, they have some machine learning algorithm which tries to optimize the routes, and also checks if it's good to add a new route, or if the routes could be optimized in general. Then the obligatory comparison with other companies. However, a few things I'm finding a little bit strange. On the one hand, they say SWVL is a global company, and then as a footnote they say as the 2025 vision. So this to me doesn't make sense. They want to somehow sound more optimistic than they are. And also daily bookings, they said it's high in comparison to others like Uber, Flixbooks, and whatever. So yeah, sometimes just keep in mind this is something I didn't really like in the presentation at all. And then speaking of the 2025 vision, so this is their goals for 2025, around 1 billion in annual gross revenues in 24 countries, and a gross margin of 30 to 40%, with adjusted EBITDA margin of around 15%. So what is the detail, or what are the details of the transaction? As you can see, the pro forma equity value is around 1.5 million, and the pro forma enterprise value is around 1.1 million. They say the EV divided by the 2023 expected gross revenue is around 3x. And as you can see in the end, if there are no redemptions, there should be $405 million to cash to balance sheet, which is not that bad. There is a 7% PIPE investors, and the public shareholders will get 22% of the ownership of the company. So initially they wanted to close the transaction in Q4 2021, and now it's the end of Q1 2022. So it's not that bad, but still a little bit of delay. And down here you see the Queen's Gambit team, as I mentioned before, 3 ladies with a lot of expertise, as you can see on the small icons down here. And they also, I think, the Mustafa Kandil is the co-founder and still CEO. And I think they founded the company together, which is a good sign that they are still in the company. So, as mentioned before, they have, I expect to have around $405 million in their balance sheet, and they put down here the rapid expansion plan to be in 20 countries by 2025. So on one hand they say 2025 down here on top of it, and then they list the capital needs, which they put at around 250 millions. And if you think, sure, 250 millions, they have 405 million on the balance sheet normally, and then they're well funded. However, if you have a look at the footnote down here, the capital needs are over the period 2021 to 2023. So 2021 is already over, and then it's still only 2 years and not until their 2025 vision. So keep this in mind. And this, quite frankly, I don't really like how they presented it here. It's a little bit misleading, and they should have done this better. And then on the next slide, there's the projection, and quite frankly, it's really, really ambitious if you project from 16.8 million bookings to around 560 million bookings, and from 26 annual gross revenue million to 1.3 billion. So this is really ambitious, and I hardly doubt that they will achieve this. However, I'm happy if they do. I wish them the best, but I think this is way too optimistic, and especially given the numbers they have been posing recently. So they have a lot of growth, yes, but from a very, very tiny starting point. So this is, in my opinion, it's not realistic for any company to do these kind of projections at their phase where they're in right now. But projections look nice, and if they can pull this up, then this is by far, I think, a good investment. And I showed you before some comparisons I didn't like. There's another one which, quite frankly, I don't really like at all, and they're comparing the company with the Uber. Now, why don't they just compare it with the other peers for their segment in their area? Because Uber is normally a totally different geographic, which they are in. The same for Grab and Lyft. So this doesn't make sense to me. And also they compare their current and potential gross margin with the other companies, and even with their expected gross margin in 2023, and also I think it was 2025, they're still way lower than Uber and Lyft. So I don't really see why this should be a good sign. And then right now current is minus 23, but they expect to be between 15 and 20 in 2023. So yeah, it's kind of comparison between apples and oranges. And also, if you compare these to the 2025 goals, they have around 15% adjusted EBITDA margin. So don't know why they mix it up now with a near-term run rate which is a little higher than their long-term. Also, this to me doesn't make sense. It's just a way to try to make the company look better. Yeah, and then the last slide I wanted to show you was the financial projections, since they want to be adjusted EBITDA positive by the end of 2024. However, no overview about being free cash flow positive, because I'm thinking that this might be a lot later. So keep this in mind. I didn't really find it, so this should be something to keep in mind. Okay, so let's have a look at the share price. As you can see, the stock has been trading volatilely in the last few days, and after the opening on Friday it went down 5%, otherwise shot up again later on and closed around 1% down for the day. And then if you look at the year to date, you can see that there have been quite some higher volume days before, beginning on March 15th. However, March 25th was a normal volume day, so it will be interesting to see how the redemption numbers will be. I guess they will be at least not that low. I'm not sure if they will be really high, but I think there might be some redemptions, so keep this in mind. Also, if you have a look again at the capital which they need for the years 2021 to 2023, this might also be impacted, which might have an impact on the cash at hand or at balance sheet. Now let's look at the bonds, and unfortunately there's not a lot of volume, and as you can see, apparently on your finance at least, they have only been traded around 7.5k on March 25th, and before the last 3 months ahead there was no trading. Not sure if that's correct, but at least I think there's nothing to be gained from this stat right now. Even if it's down 5%, I think that's no big deal. Might still get an increase if the shareholder meeting is positive and the business combination has been approved, but I'm not really playing these right now. And then have a look at the broader sector, like companies with Lyft and Uber. They have been performing relatively badly in the last few months. However, this has been the case for most of the tech companies, and in the last month there has been a slight upward trend. So maybe this is supportive for the company, for SWVL in this case. And it's the same with Lyft, or at least similar, been range bound between around 39 and on the bottom 34.5. So this would be at least there's no support from this case, but nevertheless it will be interesting to see how the company will perform after the merger, if it's accepted, or if the merger gets accepted. And we'll see what the company will do in the future. And as you probably can tell, I don't really like the way they presented some slides, and therefore I'm not really buying the story right now. Maybe I'll be checking up on the company, not sure about this, but I will definitely not be investing in the company right now. However, as I mentioned before, it's no financial advice. I'm no financial advisor, and therefore you have to do your own due diligence before investing or not investing in a company. What are your thoughts about the company? Are you interested? And maybe is there anything I overlooked? If so, please let me know in the comments, and until next time, have a good day. Bye bye.